This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. I'm going to give you a stock market update for Friday morning. So I want to use a chart. I'm going to add in an extra chart this time that is a grid that keeps things simplified so we can take a hard look at each individual trend and just get a feel for what's going on. But let's start with the market conditions. So we're going to go with that right now. Okay, so we'll start from the bottom up here. A couple of things that I think are pretty important. So this was an X last week because we had we had a pretty good drop in the number of bulls very quickly. And I mentioned this, believe I mentioned this last week or the week before. I wanted to see, as the market pulled back, would the bulls kind of drop away really quickly, right? I mean, so if they're running away really fast, then it kind of limits the downside. If they're stubborn, then it has the potential of creating a bigger drop. But this coincides with kind of what I've been thinking, and I hope I've been getting this across, that I'm viewing this more as a correction, pullback, and an ongoing trend, as opposed to some kind of a big reversal. Now, the overbought oversold oscillator moved to neutral as well, because while we did have divergence, we have moved it back to the neutral area of around 55, 56. So, from that standpoint, I think we've alleviated the risk that was taking place at the upper end. Now, that doesn't mean that we can't continue down and follow through with the original signal, especially because what's taking place in the volatility. This is probably one of the most important things that has taken place here in a little bit of time, because we finally have the average true range for the S&P climbing enough to get the 18-day moving average of the average true range to turn up as well. So we're above a rising moving average on the daily chart. That's the first time that's happened since April. And through this whole trend, we finally have increased the size of these bars to signify some signs of short-term. I would consider the daily the short-term trend. Short-term distribution signs, right? So from that standpoint, this has turned to a negative, and that might help this original signal where this was overbought and we were getting a little too bullish to have some more follow through. It also might increase the likelihood that we want to work our way a little bit closer to this 18. Now, there's a couple different ways that could play out. It doesn't have to go straight down, and I'll explain that when I go into the next chart. But I wanted to make sure that I covered the fact that this short-term pattern of volatility has increased. Now, it's so blatantly obvious when you look at the average true range on the weekly chart. It hit another new low, and it's below this declining line, that this is a pretty strong trend. It's not a lot of volatility on this time frame. It's not showing up in that respect. So I'm assuming support on a pullback. And when we have support on a pullback, we have a trend in place, and we have good momentum conditions on both this time frame and this time frame overall, then you got to be careful about trying to make too much money on the downside, right? Or being too cute with it. I do think there's more downside risk in the short term, but not the type where we're necessarily going to make a whole lot of money shorting, even the indexes. All right, so let's go, and I want to switch to one other chart. So I like to do this chart every now and again to just simplify matters. All right, this is how I teach. If you take my course, this is how I sort of explain to learn a new indicator, and that is, you take everything else off the chart and you put it up. So this is just a simple 18MA. So if you want to learn how to use a simple 18MA, you start putting it up on charts by itself, and you don't even have the momentum up or anything like that. And what this does for us doing it this way is it really helps us define the trend, because we had a declining 18-month and it's now just starting to curl around, and but certainly likely to provide support on any kind of a dip, because what was resistance is now likely to provide support. Now, we do have a little bit of an air pocket to fill in, and it's possible we could spend a little bit of time while this cups around and curls around to the upside. But I would say that the bias shift started about 3 or 4 months ago and has improved things. Now we're up into some resistance, and we probably ought to take a breather of some sort or some kind of a pullback. But I would view that more as a bullish scenario if it plays out that way. Look at the weekly. You see how the weekly turned back above a rising line? Well, it got above the rising line and then undercut it, but then cut right back up with a nice green bar and then has been above. Now, the problem with this is that we haven't tested this line anytime recently. It's gone a pretty long period without having any kind of a test or filling in this kind of air underneath it. So it would make sense, it would be healthy if we do that. Now, if we decide to turn, let's say I know there's more inflation data coming Friday morning. If the news is the kind of thing we want to see and we see this thing really jump from here and we don't come back and test, then I'm looking at this being more of like ending action. Maybe we even go and climb to a new high, and then I bet we make some kind of a more important peak. It would be a lot healthier if this continues to do this and fill itself in, come back and test this line, and then go and then try and attempt to go again. Now, the key line that we don't have to determine what's going on here. We know the bias is to the upside as long as we stay above this line. We don't have to make a determination about when to get in using this time frame. We can go to this one because this line has been so important. All right, this is what I've been saying to my subscribers here, is that this is the key line. We held it. First of all, we held it here. Again, we held it here. Again, we held it here. So this is just a simple 18 MA. You know, all these fancy indicators out there, but look at how good this has been. We haven't, and then we finally broke it here. And now this line has turned down. And look at the rally in today. The peak of today failed right at that line as it's rolling over here. So I kind of feel like, I mean, anything can happen right now. We're still in an uptrend, right? So it's possible we could come back up through this. It's also possible we could kind of channel sideways while this is catching up and this is just going sideways. Is it possible we can just turn on a dime and go up again like I show here and do that? I mean, we could do that, but I view that as the most negative scenario, actually. It sounds like it would be the most bullish, but if you don't gather yourself and go through the normal consolidation phases, then you have to sort of assume it's some kind of climax type of pattern. So we're at a pretty key level here. I think if we break and follow through to the downside, you know, we got to start thinking about our downside targets. Now, I want to go to our standard chart with all the moving averages, all the indicators up to show you where I stand on that. So let's just go and really look at this weekly chart, because this has been the key. Okay, this is the channel. This is the line that's important. But we got stretched away from it and we ran into this resistance area. All right, now we had price resistance. All right, we also had the channel resistance from the upper end of the channel. And both of those suggest a pullback a little bit closer to the 18-week. Now, if I go and draw in price support, it actually lines up almost perfectly with the 18 on the weekly right now, somewhere around 431, 432. But what I'll say is that if we come down and we come shy of that and we turn back up, so because we're already forming two lower highs, we're already forming a pinch. Do you see that? We've got a pinch forming on the weekly chart. As long as we don't have anything crazy happen Friday, we're going to have a pinch play potential. That doesn't mean we've triggered or anything, but we have the potential. So it could go another bar and still be a pinch, but it also could turn above this high, the weekly high, and get things going. So I think what we have to do is watch what happens around the 18-day right now. All right, now we've got a couple of levels of support here. It doesn't have to come all the way down to that level. It could come down to around 440. It's also possible it's just going to hold this 443 area, 443 and a half, something like that, and turn right now. I mean, it's sitting on the 40. And the one thing that's taken place here is that we've got reverse divergence, and this has worked off a lot of the overbought. We're getting a lot closer to the zero line. So we have reverse divergence. We had the standard divergence here as this pushed higher while this made a lower peak. But now we've come down a lot. We've worked off a lot of the overbought condition, and we're still sitting at the 40-day. So if we can turn around from here, I mean, I think you have to respect that, but don't respect it until we get back above the 18. Okay. Now, the other thing that I'll tell you is we had this signal last week, and we broke here, and we had a confirmed shift, a 1, 2, 3 shift to the downside. Actually, I take that back. Let me go back a second. We had a 1 here, and this was the 3. Okay, so this was actually taking this out was the 3. And then we got a rally up and we came back down and we kind of confirmed that, and we made an extra lower high and an extra lower low. But look at how there was no follow through, and also look at how we were getting divergence to show up right away. That's a telltale sign that you're probably not in a real dynamic trend. If you're in a dynamic trend shift to the downside, you're going to get a lot more follow through than one single bar and then turn around and create this little divergence signal on both MACD and ADX. You see what I mean? Now, I actually think this drop here was more important right here. Why is that? Because the ADX did not make it above 25 on that drop. Now, if you notice what's happened, we've continued to kind of oscillate around here. We're sitting right near the lows, and this continues to weaken. So the way I look at this is that we have to be on guard for a potential climax pattern where we get another drop to the downside, and it looks like this ADX is kicking into gear again, but it's really a climax. Because we have divergence in place, we clearly have divergence in place based on what's taken place. If we get any more follow through to the downside and we get the ADX to start to go, think of it like a climax and look for some kind of a reversal into support, into somewhere in this area down here. So that's what I'd be looking for at this point. It's also possible that based on the way this is played out and the divergence pattern that's developed, that we could just turn up. We don't have to have the climax. We could just turn up from here and say this was a 1, that was the 1, this is the 2, and 3 would be coming up back up through this almost 452, just under 452. That's the 1, 2, 3 to the upside. All right, so I could see being short below this 452.19 level. You see what I mean? If I'm trading, if I'm short-term trading and I'm playing this, kind of want to use the 18 at this point and see if it can't drop down into this support zone. But you're playing with a little bit of dynamite here. And the reason is this is so strong and this is so strong. All right, so we have to accept that until we get real signs of momentum loss, especially on an ADX basis. I think we have to be a little bit more careful about trying to play the short side. There's going to be plenty of time when the market decides to roll over to play the downside, right? But right now, I think you have to be, if you're doing these type of trades off the hourly, I think you have to be really quick and expect to be whipped around right now until we lose more momentum on the upside. All right, that's the update for the week. We'll see you next time.